Hello guys, welcome to a Trading Parrot. I wake up this morning and I see all over the place people moaning that there is some sort of price suppression going on. A selling wall located right around 115 to 116k that is preventing the price from reaching higher targets. Liquidation levels that are way beyond that level that could be, according to them, being suppressed with price manipulation. In this video, I'm gonna focus on that, whether we are in the context of a dead cat bounce or if there any further upside. After all, general markets had a really decent close yesterday. We'll cover that as well to see if that can spill over into the crypto markets as well. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And can we get 1,000 likes? I'm sure that there is 1,000 arrogants watching the video that resonate with this need for emancipating, being able to express yourself. I have very good news, guys. Today we're gonna do a live stream, but let me first tell you about 2bit exchange. In just 2 minutes or less you can open an account. That is because doing KYC on 2bit is optional. You can get access to up to 200 leverage. Of course, do not do that unless you want to get liquidated immediately. You get access also to 1,000 trading pairs and it's available across the globe everywhere. As soon as you open the account, they give you $50 to trade for free, even before your own deposit. After you do your actual deposit, you can even claim up to 30,000 in rewards, depending on trading volume and deposit size. And I even haven't mentioned that there is an ongoing trading competition. Yes, on 2bit, the link are all down in the description. $3 million at stake. Do not miss that. We're all trading together. For that, there's still 20 days. And High Block Capital is summarizing the situation pretty well. BTC nearest long liquidation level are sitting in the 113.2k to 113.4. Each time we went for the short liquidation level, price reversed quickly, likely mini liquidation hunts. The 10% spot bid-ask ratio is still not showing any signs of bid unbalance. If you really like this type of waka waka language and you can really make any sense of this, my mission in this channel is to get you to understand this sort of language. And what better than today upcoming live stream at 3 p.m. UK time. We're gonna do a full hour with the founder, one of the founders of High Block Capital, Vinit. He's gonna join me 1 hour to do TA on BTC, altcoins, all with a focus on understanding all the waka waka, all the CBD language, where to find the indicators, how to set them up, all of this using one of my favorite platforms for doing so. If you like data-driven trading, do not miss that. It's gonna be a mix between doing live TA on the markets and at the same time some background tutorial and understanding how to set up all these charts, where to get them and all of that. And second reason not to miss that is because I managed to get Vinit to create a big discount code. This is gonna last for 1 week. It's gonna be attached to the live stream video and it's gonna apply both to the advanced and professional plan. So if you've been thinking to step up your data-driven trading game, do not miss the stream, neither the discount. I am addicted to these charts and it shows me everything I need to know in the most easy to digest way possible. Open interest, extremes, outliers, CBDs, outliers as well, liquidation levels, and all of that. We will cover it today. The S&P 500's 10 biggest companies are pulling away from the rest of the pack. And in today's analysis of general markets, I'm gonna cover 3 different ways of observing these divergences. Why? Because we really, to be honest, between you and me, we really don't care what Bitcoin is doing in price action. We really don't care what the altcoin is doing. If we are missing out on what's going on outside the bubble, you know, our floor shakes and everything pukes down. No matter how beautiful you are seeing bullish divergences on your favorite altcoin or whether there is some support or resistance, all of that gets cancelled out if general markets puke. And that is the main reason I cover it. And today particularly I got inspired with this, which is the S&P 10 versus the S&P 490. Very interesting concept, and I managed to get the ratios and a lot more deeper than what you're seeing in this post. Do not miss that analysis. We got some news coming in. BTC rebounds as ETF flows show signs signs of returning. I'm really not sure about this. This is on news from today, but I've seen still up until yesterday we were in the red in here. We had one of the biggest one, the 1st of August, with 800 in the red, and on Monday 300. So hopefully by today we're gonna see the opposite. Maybe they have a way to see it live. Let me know in the comments if you know where to find that live. So far I always see it 1 day delay, and this is time 5th of August, which is today, so maybe they have a way to see it. Long-term bullishness evaporates in BTC options. Options metric turn neutral from bullish as traders price more macro risk. This softens upside expectations and can cap rebounds. So let's be aware of that. Of course, we are never gonna trade what we are being told by CoinDesk or any, major publisher. They usually have some hidden intentions with what they're telling you. They're telling you things are bearish, that there is further downside when you're falling and there's further upside when you're going up, because they want to trap both sides. At least most of the articles do. But it's interesting to know what the options are showing, so if that is valid information, we should pay attention. That's a 4 out of 10 in terms of bearishness news. We also have digital asset funds see weekly outflows, leads with 404 million. We already covered that one. In my opinion, these 3 days have been looking a little bit on the bearish side from the ETF spot on Bitcoin at least. Looking at Ethereum is not that different. Actually, we have 152 followed by 465, and now that is undoing 1, maximum 2 days of the past bullishness on Ethereum. So I think we are still looking fine just based on those numbers. Of course, there are other factors to consider. So I wanted to investigate a little bit more on the options to really see timelines, effect on the price expected, and trying to find some trusted sources of this data. So apparently there are some effects currently going on coming from the options market. BTC options skew turning neutral to bearish at short tenors and flattening at long tenors. That typically caps sharp upside and favors range-bound price action until macro clears. We have multiple sources of data validating this perspective, and the effect could go between 1 to 2 weeks, up to 3, maybe half a year, but most of the effects is allocated in 1 to 2 weeks, to be fully honest. The 115k area is flagged as the area to watch for, and on that area I completely agree, because we are seeing a sell wall at the moment around that area and beyond, preventing the price from reaching the top of the range of 120k, where we see the largest liquidations, the mouth-watering levels for me, for my long. So before we go into that selling walls and we start diving deep into the order book, let's have a look at my Patreon questions. Alex is asking, hash ribbon rally start now or is not reliable anymore? And I guess he's referring to the hash ribbon indicator in here that we were flagging that it pinched the low. If we look at the hash rate of Bitcoin, it's been on a rise, but every now and then it pinches the lowest percentile, which has happened every time we see a green dot in the chart. For example, in here, this one managed to produce a miner's capitulation. It went very low, up to 668 million. Recently, we did something around the same scale, going into 700 million, but we have very quickly recovered into over 1 billion. And I guess that is keeping so far the averages applied to the hash rate with the mouth open. So we are not getting close to a Bitcoin capitulation again, similar to the previous week down caused this capitulation. Now, within the capitulation, the price started rallying, which is something that we cover multiple times in the video. And we say that this could have influenced the decision from miners to start distributing those amounts, including all wallets. I was thinking the other day as well that it could be also the ban on crypto on China, but I also read that that ban was way before and that is coming into surface just now as a manipulation because the price is coming down. Who knows? China changes their mind all the time in their approach to crypto, and it feels like it's a constant manipulation that we shouldn't care that much. And 115 definitely is the level to watch because we have lost the support in this range. There is some sort of topping patterns around here, and now that we approach it with humble price action towards the top, all that selling wall is only telling us, guys, that the shorts are getting cocky in that area, that they are expecting the C wave to come in next fixed and that they are betting everything they can around this area. So I don't take for granted that they're gonna succeed. No matter how much I see in the order book, sometimes the price goes into that level and they just rack pull. All they wanted is to give you the illusion that this is impossible. So be aware of that. You cannot use the order book really to draw conclusions before the price gets there. At the moment that the price gets there, what happens in that precise moment tells you a lot, but unfortunately no one has the time to be looking at the order book 24/7. So I think it is reliable. Every time that the hash rate comes down, if you get that together with some price coming down and then the hash rate recovers, we usually see a rebound in the price. How high it can rebound, who knows? Every time is different. How much you think there is left of the relief? If it's just a relief or data starts to suggest otherwise. We'll have to look into the order book. I've seen as well that the bid versus ask ratio is still very thin in terms of the support. Everybody at the moment is grouping themselves to short Bitcoin. And that unfortunately won't tell you that much, guys, because in one hand, if they succeed, we get the C wave and we need to execute the next step in the plan to precisely what we've been saying, right? To add into the long. If they don't succeed, those shorts that are entering now are tomorrow's shorts liquidations. When we get, the news 800 billion in short liquidations. So we could get into 122 and produce a big major short liquidation. But we need to think that we've been quite for a while already liquidating shorts and we are now suddenly starting to move into liquidating longs, right? So we move all the way from being at minus 26 in the oscillator of who's getting liquidated, which is more than ever in the whole cycle. Let's focus just in this cycle. This made it to minus 24. This was minus 27, minus 26, around that figure. And now we are crossing back into the 1. So typically, after you are very overextended in liquidating shorts, there is a contrarian effect, like a backslash that hits the longs for a period of time. And we have had so far just humble 1.5 in the positive. So I'm tempted to believe that longs should get a little bit more love. And by love, I mean punishment. Of course, this is just a little bit like flipping a coin, right? Because if you get into the positive, well, you could get further downside in here and also liquidate more shorts. My bias is because we hit so much the shorts to minus 27. I feel like a 1.5 really doesn't balance things out enough. And we are also entering into this season where, longs get a little bit more love. So let them have their love as well. Right. The aggregated open interest is calling my attention in here. Why? Because we have this line of support on the open interest. This is not price action, guys. I'm looking at the open interest. You can see that it has penetrated the blue line. And yes, stop imagining things. I'm talking about the open interest in here, please. And we have a little bit more support coming in at 37 if you put a horizontal line in there. But the open interest is starting to puke. And open interest reflects longs or shorts all together, right? So it's all the positions with leverage in futures. And if it starts coming back down, what does it tell you? Well, you don't know. There might be some shorts closing, some longs closing, both. If there was a significant liquidation, well, you might get a better understanding on who got hit that they needed to close. And not necessarily it comes down because they got hit. Sometimes they say, I got enough of this, or I'm in profit and I'm gonna close, okay? So all we see in here is that some longs got liquidated, not that much, just 90 million. That's just peanuts. The day before, 100 million in shorts. So we don't get much from liquidations, but it tells me something about the sentiment, okay? When we see a decline in the open interest that is sustained, this is not yet sustained. It's just a week down, but it's like a warning alert. It means that there is less interest in speculation, right? In trading with speculation, with open interest, with leverage, that they are kind of cooling down, that taking a break. And when that happens, price follows through, starts going sideways, things get more boring. Of course, this could come back up and then the party is back again on track. But if this continues coming back down, we are going to have some boring periods and potentially some downside too. CME update. We closed the gap from yesterday, Monday. We started the week with a thin gap and you can see that the price came back down to visit that level, pinch it, close it, is closed on CME, on Binance. Now price is just at the same level of 114. 114. It's good that we close it if we want to go up, right? Because we got that out of the way. If we want to track what's next below, well, price needs to make a quantic move into 97k to hit another CME. They're all being taken care in this period, nothing left around it. And I have done some updates on the 4-hour and daily. We had some breakdowns, but after the breakdowns, we reclaimed support. And I covered that on the 4-hour and daily. You can see the double bottom, reclaim global support, and the daily reclaim this line. The global support is at 25, but we reclaim this internal level. So that was bullish. We then follow through on the 4-hour with a breakout confirmed, but it kind of fake out. Now we're coming back up. You know, the 4-hour has become some unreliable. I don't know what's going on, but you know, it's following through with additional upside, but not putting a new high. We'll see if we can get higher. If we form in here some sort of cap and handle, look at this is the cap. If we complete the handle at 115 and break out further to the upside, we've seen some rejections yesterday in here thanks to the selling wall. If that selling wall gets exhausted and price still wants to push beyond 115, look at the volume profile. There is a heel in there. That's resistance. And of course, if resistance, because it was previous support, resistance, and again resistance. Or if we can manage to cut through this heel and we go through this depression, that depression should be easier. We have some fair value gaps in there that could attract the price, and we could find ourselves at 118 at the point of control. If we flip above the point of control, we are in the bullish area and we take 120, 122 to 122 possibly, and then I get happy because I get payday again very quickly. The short took a heck of a lot of time. I was so pissed with so long waiting for the short to take profit. Hopefully with this long we are gonna get into 120, 122 quicker. Now I want to show you something about the liquidations. The 50 and 100x are all located in here. There is a little bit of 107, that number that we've been repeating constantly since the video from since the video from Sunday, but the amount of crazy leverage over 50 to 100x located at 120 makes it really attractive. So maybe, just maybe, we are gonna get an opportunity if we get the cap and handle to break above 115. Let's calculate if we can reach that level. Is it reachable? Okay, let's put this over the neckline. Something, yeah, more or less like that. Okay, we can get into 120. And at that point, we're gonna be just below this. They're gonna be sweating coal and they're gonna close some of them, their short positions. That turns into a market buy and could push the price, you know, slightly higher just to give the final hit in the balls to those people. Right, but we need to be devil's advocate. This could fail as well. We could not manage to break the 115, in which case this could well turn into a breakdown, right? We could fail to reclaim that and see a rejection, and at that point we start talking about the C wave, okay? And the C wave, we need to be informed. Where is that C wave? And I think I got it somewhere in here. Let me see. So yeah, I already prepared the C wave. Let's get rid of these degens out of the way. If we come from this swing, I could have placed it like this, but let me do it like that, okay? Some mistakes are allowed. I'm gonna connect that to this low. This morning I have to move this a little bit up. So far that is the high, 115,700. Extension of 1 is at 108. Golden pocket is at 104. So in between the extension 1 and the golden pocket is where we have these two interesting heels. So that is attractive, guys, definitely. I'm not gonna lie. If my initial small order doesn't manage to get lucky into the 120, well, then we need to deploy further at the 107, 104 levels. From the point of view of crazy leverage, it's more attractive the top, the 120, but if we bring in everybody, the 10x, the 25x, then we're bringing in the risk of the pros, the people that trade better, the people that survive markets and get to keep their profits are trading with less leverage. The rest of the people are gambling. There are some lucky bastards out there. Let me know in the comments if you are one of those. And when I mean you have survived, I don't mean in the last 2 weeks, idiot. I'm talking about in the past 2 years, 3 years. Can you survive trading 30x, 50x? Let me know how it's been for you with that. Anyways, going forward in here, I think there is a lot more liquidity aggregating all the bands, the pros and the degens aggregated make it more attractive to go to 107. But if market maker wanted just to go for the degens, it's gonna go into 120. And that is just the isolated analysis of the liquidity pools. Of course, there are more aspects to consider. And remember, I am not here to find out the final decision on whether the price is gonna go up or down, because the answer to that is I have no damn clue. The beauty is that I make money constantly without losing, without knowing where the price is gonna go. How crazy is that? Yeah, you wanna become part of the we don't have a fucking clue and we make money? Well, then continue to watch the channel, hit the subscribe, hit the like, and I'll show you how. It is really a relief to be able to trade without knowing where the price is gonna go. Trading uncertainties, become a master in uncertainties, and you're gonna laugh at people trying to figure out direction. Right, so let's call it 4 hour. At the moment, it's having a little bit of a twist that is bullish. I am gonna keep this in gray because it's bullish, but it's low quality bullish, okay? If it's high quality bullish, I'm gonna turn it into green. Daily is also looking decent, but it's not like, oh my god, we got the best ever setup in history, let's go long with everything. No, I am in a long, small position, managed, following a plan and being strict and disciplined. Oh my god. Right, CPR, what's going on in here? Well, the price put 2 candles trying to reclaim those 3 pivots and hasn't managed yet to do a lot more than that. We want to see the price really coming above this, testing it as new support, then breaking this neckline and carrying on into what the CPR model says is up for this month, which is to get into 124. Why? Because the previous month we already hit the second resistance and that was bullish. And the model says that when something has been bullish, the next month you're gonna remain at the very least bullish enough to hit the first resistance at the very least. That's what the model says. Our second resistance is at 132, 142. Does it say that we're gonna get there? No. It just says that if we were to do a reversal, the most likely thing is to at least touch this, and then we talk about reversal if we can get a reversal. Now, the seasonality says, no, we're not gonna get there. Can it happen that we go straight and we test 106? Yeah, it can happen. At that point, the model is gonna say the month after is also gonna test the red line too. We don't know where is the red line of September because we need to wait until the 1st of September to see those numbers. We can speculate and do a pre-calculation of CPR just as ChatGPT. Give ChatGPT these levels, the pivots, and the 3 levels of resistance. They are all in the screen at the moment, in red, in green, and in white. And ask ChatGPT, based on the formula of CPR, can you give me the calculation of where the levels are gonna be in the next month? You can also maybe even find at CPR open source implementation, and it will give you the numbers. Knowing those numbers up front is really cool. The daily has reclaimed. That's all it has managed to do, right? But it had quite a big puke in here. It broke that level of support, and now we have reclaimed. We haven't gone yet into the white line of resistance for a potential breakout. So there is still some upside for the price to be had without necessarily having to prove that we can break out bullish. And that is an advantage, guys. Imagine this RSI gets into 55 and sees resistance there. Knowing that that's on the table and that we don't need to break out yet could propel the price into maybe 118, 117, where we still have resistance. What resistance? Well, this resistance, guys, don't you see there? There is this white line has been resistance from 14th of July. So if we meet with that line again, it could stay resistance and then we cannot cross 117 or 118. If we break the white line, well, we put on the table a huge upside, but we are not there yet. MACD still pointing down, but starting to roll up in here. And also the histogram is slowing down the momentum down. Weekly hasn't proven anything this week. We are still in the area of finding the bottom of the pullback, okay? Longs still not stepping in enough in here. There is a lack of longs. Very little longs is a great opportunity to enter. We didn't get the signal for some reason. Something was missing in the formula of LS2. Therefore, it didn't trigger, just so you're aware. In here it did trigger, in this pinch in there it did, and also in this one. Net taker continues to be in the red, meaning that aggressive sellers are still in control. The open interest oscillator is flipping to the low end. Notice that when we are in the bull market and we are below this orange line, you get very decent entries for scalps or swing trades longs. I entered my long already at -4, but if we reach -7, we could get another alpha for that additional order if we want to DCA on the way down. I try not to enter longs when we are on the top end, because that means that we are overextended in terms of longs, and that could slow down the price very quickly. That's typically when you are already in a pump anyways. In the last 30 days, that 120 continues to be the most interesting level of liquidation. The order book still no signs of purple whales. They're really not trading that much this week. Very quiet. The brown whales are starting to move up, and the green ones as well. We've seen in the past month purple whales joining a move to the upside a little bit late, but we also seen that they exit before and they rug pull the rest. They tend to be the ones that are correct, but I'm just trying to say that waiting for them to start an uptrend with the price hasn't been the best strategy this month, because they have been a little bit more conservative in their timing for the entries. At 120k, 37 million, we have all that resistance. That's the selling wall. It's not that significant, guys. I think you are seeing the orders more than in the lower end, and that's giving you that illusion. You can see that when I talk about the aggregated open interest, that it came down. Well, that's something that I can perceive in here with these numbers. 40 million, 45, 20, 30, you know, it's small numbers. When the open interest really spikes, we see orders accumulated of 100 or over 100. And in the order book, we can see all those orders. On the left hand side, I have all the aggregated exchanges on Market Monkey Terminal applied specifically to perpetuals. Now, there is a way now to select only perpetuals or only spot, which is really convenient. And that's why I'm splitting the chart in two. On this end, I have all the orders coming from all spot exchanges. And you can see at 125, 120, that's where they really want to sell big. And the speculators on futures are around here trying to short this level to produce the C wave. That's my humble opinion. And if they're wrong, they're gonna actually help throwing petrol to the fire for those liquidations to push the price into 120. So if they're wrong, I take profits at the highs. If they manage to push the price lower, I need to very quickly decide and look at the data to see if I'm gonna take 110, 107 or slightly lower based on the conditions if that happens. Of course, if you want to be notified in a timely way straight into your inbox with an email, then join my Patron and I will give you a summary of why and what am I doing at the same time I'm doing it. Sometimes I'm on the move and I just write and type something really full of spelling mistakes and whatever, but at least people get to know. I don't publish anything about setups of my own altcoins. It's just specifically about Bitcoin, but you can use that as well as an alpha, because whatever happens to Bitcoin, the altcoins tend to follow through with some caveats, of course. Right, let's have a look at what's going on in the order book. The funding rates are coming back up. They're in the positive. That means that some longs are getting interested in this move up in here. In terms of the ask versus bid, is looking pretty red, with the exception of 2 to 5% deviation away from the price, which is green. Everything else is slightly red or very red. Like for example, 1 to 2 has 26 of red. Wow, that's a lot. And in here, those dark areas where we were noticing that that's the case as well in terms of the percentiles. Now there is a little bit more of defense at the 1% away from the price. Those are limit orders defending the price, but with the exception of straight next to the price defense, everything away from that is at the very low percentiles. So not really defending the price from falling. So it's going to be a very interesting fight in here. Also, the delta is putting the shorts at higher risk. So everybody that is trying to produce that C wave, they are taking a huge risk. And in my opinion, if too many shorts enter there and they make this wall just impossible to miss for market maker, they're just gonna produce the opposite. And that's why it's so difficult to forecast price, because we have now a huge incentive for price to go up, and it's just like a balance, right? So if the shorts really enter very big and they manage to make that click happen, happen, they can produce the dump as well. So it's a matter of who the fucking hell knows what's gonna break first. And that's why I approach this in this way. I have some exposure because I smell that we could burn them, but I don't really know it's gonna happen effectively. The more certainty I have about a setup, I increase size. So that's how I manage risk, right? Size needs to be fully connected to the risk I perceived in the setup. So look at this. We have reclaimed this line, we have tested that level, and we have these fair value gaps up until 118. That's where we meet with the point of control, the area most traded in all this range. If we get lucky, we go to that one on the top. If we get rejected by the point of control, well, there is no more incentive to be here, neither, to go anywhere apart from taking further fair value gaps to the lower end. Let's have a look at the general markets, and I promised that I was gonna do this interesting analysis on S&P minus 10, minus tech, minus different things, or some ratios as well, and some interesting things I want to share. Dollar continues to appear in the news as the dollar is crashing big. That is a huge disaster for the dollar. Actually, I see the opposite. I don't know. People say that in my thumbnails I'm only following the trend. That cannot be more wrong. I'm absolutely a contrarian. Even my mom used to call me the contrarian when I was a kid, and I guess that spilled into now my trading style. I love the contrarian trends, and I struggle actually to follow the trend and to keep my trades open for long enough, because I'm always looking for what looks odd about something so I can take that contrarian trade. Anyways, in here we hit the resistance, but I'm not necessarily counting on this to be the end of the move up, because the momentum keeps pushing higher and higher, right? On the weekly we can see that we close very high at 41, and this week we continue into 43. So that is positive for the dollar. Dollar being positive is bad for risk on, risk off assets. And the same goes for gold. If gold broke out, I mean, the momentum has done that, but it's kind of ridiculous. The breakout is not really strong. It's there, but it's not very strong. And the price continues to be very shallow, squeezing coming for gold, and we don't know direction. There's just a small, tiny bias. You could say 51 against 49 chances that this will continue up. But that's not a lot of a hedge, isn't it? But it's saying that we are going to continue up, and the price is getting ready for that breakout or breakdown. If it follows with the dollar and we get a little bit more fears in the macroeconomy, well, that is going to push up together with the dollar, and then Nasdaq S&P will take another dip. VIX broke out last week, reclaimed the breakdown actually, and now is in the process of retesting this new support. If we come back down in here, well, that was a fake out. If we push higher next week, then we are still in the way for that expansion of the VIX and further downside for any assets or most assets. Nasdaq, okay, we have this red candle in here that is still engulfing the current progress of the week. So we are trying to reclaim levels. We're trying to do whatever we can to continue with the upside, but there is a rolling over and the momentum is not managing to put a new high. It doesn't need to this week to prove itself, but we need to continue monitoring what's going on in here to see if this is gonna be the top or a local top and retest support in here, or if we're gonna get just a U-turn in continuation up. S&P is in the same situation, and now I'm gonna bring in the S&P XT. What is this? Everything except tech. And if you focus on the S&P X in here, you can see that, let's focus just on the RSI. Who needs the price? Let's just use the RSI. The RSI has broken out. It did it on the 2nd of June, and we managed to get to 66, 67 RSI. If we take out tech, this broke out and fake out down. So we are still against that resistance. Now let's compare it if we do S&P minus MGK. What the heck is that? MGK, let me show you, stands for mega cap, okay? So everything that is in the S&P, but that is huge, like, I don't know, Apple, Amazon, Nvidia, all of that, I suppose. I don't have the full list, but I'm assuming that the biggest one, right? And I wanted to have that perspective because this excludes tech. That's a huge exclusion. MGK excludes the big cap. And that's also in the context of a rejection from resistance. Then you have the ratio, and the ratio of MGK, so everything that is huge cap divided by the S&P, to see what are they actually doing. And they are at the moment hitting resistance on the weekly. So we got a bunch of levels that are in resistance, But over the surface, what we are seeing is a breakout that is rolling over. So in my opinion, there's a few signs in here that are saying and confirming what some analysts are saying out there, that we are a little bit in bubble territory. Now, the problem with bubble territory is that you never know, you cannot estimate fully when it's gonna pop. And the recommendation in general from the pros is do not try to time it, right? But here we are hitting 69. That's a significant level that has rejected this particular level, and we have already been rejected from this level when we consider everything except for large cap. All of this very interesting to me, and the takeaway that I use is I am very careful with my longs at this point in time, despite the fact that we get all this erratic behavior. One day there is a sell-off, the day after there is a huge pump. This is just to me part of the perfect recipe for a bubble to pop. But again, I don't know the future and I don't know what's gonna happen. Bitcoin dominance is still in the same place as yesterday, no changes. Ethereum is about to reclaim everything that it moved down into 3.3, now is pretty much at the same close of the previous month. So that's very bullish and it's showing something that it hasn't shown before. In this case in here, we sold off a lot lower, then we came slightly higher, but eventually we sold off. So hopefully that's not gonna be the case in here. I put out a video yesterday about Ethereum. I suggest that you fully watch that one for the full picture. Thanks so much guys for watching the video, and remember that we are gonna have the live T8 at 3 p.m. UK time. That is around 3 to 4 hours in the future. Go to my YouTube channel, my page, find the video is under the live tab and hit that you're gonna watch it, and hit the like as well. That's really gonna show it to a lot of other people to watch as well, and it helps the channel if you want to see more videos like this, in-depth with analysis with people that actually know what they're talking about. Vinit is a master in data-driven analysis. He combines all the math, all the understanding of the markets and everything, and I'm sure it's gonna be very interesting. I'll see you there. Take care. Bye bye.